Well, hello there, everyone. It is still Tuesday, March the 29th in the year 2022. And the point of this video is I'm trying to give some generic information for a subscriber. It's a very nice gentleman. He wrote me a very good email, but I keep people anonymous on here, so I won't give like his exact information or anything or tell you who he is. But thank you for writing me, and hopefully just email me back if this answers all your questions, okay? Don't comment, because then people know who you are. But just email me back, let me know if I answer it in a well enough way. But what I'm gonna do is just give general information. I never, with my channel, I never want to tell people what to do. Everyone is their own person. I try to share what I've done that has made me get to the point I'm at now. I try to share information that perhaps others can use to help themselves. Sometimes I may get on a little tangent and be like, oh, you need to do this. But I'm just talking. It's just masky. I'm just a YouTuber, okay? So with that being said, I never mean any harm. There's another saying, don't sue me, bro. I'm not a financial advisor, not a CPA, not an attorney, et cetera, et cetera, et cetera. All right, so basically the background on this email, person wrote me and they said, they told me their age and they told me where they live at, but they currently have 2 rental properties, okay? One property is paid off. And the other one they just bought at the end of last year. They have tenants in there. They told me what the value of it is and how much they owe. So they put, they have maybe, I don't know, 30%, 40% equity in the, we'll say 30% equity in the second property, okay? Then they told me about the current residence. They still have a mortgage on their current residence, but it's paid, they got, again, on that one, 40% equity maybe. I might be wrong with numbers there, I'm just ballparking. And they got some savings, okay? And the question is, should they start looking for another rental property? All right, here's some general information, what I would do knowing what I know now if this was me. Knowing what I know now if this was me, as much as I would love to have a paid off rental property, I would probably, me being me, do something like a cashback refinance. I would probably get, or I could even possibly get a HELOC on it. If I was to do a cashback refinance, I wouldn't get a mortgage on the entire dollar amount by any means at all. And he told me the dollar amount, it's a healthy dollar amount. It's higher priced than what I buy in the Midwest. So if it was me, I might get a cashback refinance of half that dollar amount. Because it would still give me about 6 figures, okay? Or, and if I did that, then I'd have a mortgage. Then I'd have positive cash flow. Because without knowing all the specific numbers there, if he got a smaller mortgage like that, I would assume he's charging enough rent that he would have positive cash flow. Okay, but the other option with that house would be to potentially take a HELOC on it, home equity line of credit. I've never gotten a HELOC on a rental property. I've heard other YouTubers say they've done it. I know it takes some looking sometimes to find a lender that will give a HELOC on a rental property. And I've never tried to find one, so I don't know how hard or how easy that may be. I have interviewed Jerry Padilla from Prime Lending on my channel. He's up in the state of New York, Rochester. I don't know if his bank will do that or not. I really don't know. So it's a question, you can watch my video on Jerry Padilla and reach out and contact him and see what he says. Okay, but that wasn't exactly what you had asked me, and I'm just generalizing what I would do. The amount of savings you told me you have. This is how I look at things for cash reserves. Myself, Millennial Mike, and Dominic Costeros did a video, it was a while back, on cash reserves. And during the course of that video, I think we all kind of agreed on a similar dollar amount. When you get your first rental, it also depends on if you're working or not working. You told me in the email you're working. So when I was working, had a paycheck coming in, when I bought my first and my second rentals, I was still working. I wasn't as concerned about having a big cash reserve pile because I knew my paycheck was coming in. I knew I had my personal house paid off. I had enough cash flow that my paycheck could pay for a new roof. It may take 2 paychecks or 3, but it would pay for a roof or pay for a furnace. So I could use a credit card and then just pay it off real quick if I didn't have the cash. Okay. So with the amount of savings you do have, if I had that much savings and I only had 2 rentals, oh yes, I would definitely buy another rental. But personally, I buy in the Midwest. I don't buy in the market you're buying in. Where you buy, it's more expensive if you do keep buying there. You didn't say if you want to keep buying there or buy elsewhere, but it is more expensive. But let's say, and you got to be careful if you get into you got what's called the 1% rule, which some people believe in it, some people don't. But the 1% rule is if the house costs $100,000, it should rent for $1,000, and that should cover your mortgage, principal and interest, taxes, insurance, money for vacancies, repairs, and capital expenditures, and still give you positive cash flow. I've heard another YouTuber say once you cross about $150,000 in purchase price and you go higher, the rents don't keep up. So if you buy it for $200,000 or $300,000, the $200,000 house is not renting for $2,000 a month. The $300,000 one is not renting for $3,000 a month. But every market's different. I don't know your market, so I don't know how well. I'm just looking at something here. Okay, so my guess is that's about the same in your market too, just based on what I saw there. So then, so anyway, you mentioned that you're conservative. I agree. I try to be conservative as well. I'm the same age as you. But at the same time, folks who don't invest will say I'm risky, perhaps, the way I've done things. You're still working. While you're working, you got your paycheck coming in. I don't know about your spouse. If you do have a spouse, I can't remember if you do or not. But if you have one, do they work? Are there 2 paychecks coming in? Do you have any kids at home? Because when you have children, that changes the ballgame a little bit. You got to be more careful because you got mouths to feed then. Okay, it's one thing. Say right now, if we fell on hard times, Mrs. and I, because we are lean, financially independent, so we could fall on hard times. I could lose this house I'm living in. I don't want to, but I could because it's a little leaner now than I want to be. So, but then if we did lose it, my kids are grown. They're out on their own, okay? We would be okay. We would be okay. I could go buy a little 2-bedroom, 1-bathroom cottage somewhere and I'd have my books to read. I probably wouldn't have a YouTube channel at that point, but I would just read books or something. So, but anyway, what else then? But if I was in your shoes, yes, I would most definitely be looking for another rental house. I would use some of my cash that I had saved up because I think, in my opinion, if I had that much cash, that's more than I need for reserves for 2 houses. So I would probably spend some of that cash, but I would also, that paid off rental property. Yes, it's nice to have a paid off rental property, but there's the power of leverage. If you put a mortgage on that house, your tenant pays the mortgage, and now you might get back $100,000 tax-free. And you can deploy that money to buy another rental. You heard the key there, tax-free. If you do a cashback refinance or you do a HELOC, it is tax-free money. And that means a lot, especially if you're working and you're in a higher tax bracket. That means a lot. So if you can do a cashback refinance and pull out $50,000 or $100,000, you don't have to worry about paying tax on it. That's pretty cool. And I'm not a CPA. I'm not giving any tax advice here. Okay. So, but you did say you've been conservative and you've worked hard. So here's and I agree, based on what you tell me, I agree. I don't know you, I don't know what kind of work you do, but you're probably a hard worker. But if I was in your shoes, knowing what I know now, I would get number 3 and number 4 rentals real quick. I personally think if that was me, I have enough money to do that based on having that cash and having that paid off rental. I would tap into that. And I would get number 3 and number 4. And then I would figure out how to get number 5 and number 6, and I would keep on going. That's what I would do. Okay? So you got my email. So feel free to shoot me an email. Let me know what you think. And maybe we can, if I didn't answer well enough, because I'm being very general here, we could always chat sometime on the phone, on the weekend, maybe if you're off on the weekend or something. So, all right. So that'll be enough for this video. We'll keep it at under 10 minutes. Hopefully it's helpful to others of you out there who might be in a similar situation. So if you have any questions, you can email me. Email is always in the description. It's mazkefinance@gmail.com. I will, if I make a video like this, I'll try to be very vague, kind of, with exact details. Okay, and I will keep you anonymous, but I'll talk on it. But I'll also email you back. Some of you I've talked to on the phone before, so we can always talk as well. So anyway, y'all take care. Mazske is signing out.